So going back, the cost of the inventory that came from the home office that formed part of our beginning inventory is 33,000. But it's incorrect to say that out of our total beginning inventory of 54,600, 33,000 came from the home office. Because again, the valuations in the books of the branch is at build price. So the amount included in the 54,600 should be the build price. So what do? You compute for the build price of the 33,000 inventory. 33,000 times 130%, or simply add the markup of 9,900 will give you how much? 33,000 plus 9,900 will give you 42,900. Okay, so that means out of our total beginning inventory, 42,900 came from the home office. And since our total beginning inventory is 54,600, you remove the portion that came from the home office, and that will already give you the amount of inventory that is part of our beginning inventory that came from outside parties. So only one step remains, class. 54,600 minus 42,900 will give you how much? Please help me here. 11,700, and that will already be our answer. Okay, but again, the most crucial information here, class, is the 99,900. It's important that you understand that the 99,900 is still the before adjustments balance, and that means it represents the markup on your tigas. It represents the combined amount of the markup on the beginning inventory and the markup on your current year's shipments. Let's proceed to problem 12-19. 12-19, how much is the ending inventory at cost? So essentially the same question as 12-17. Okay, so ending inventory, but at cost. Let's try to check if the problem gives us the ending inventory from the books of the branch. Ventures Corporation decided to open a branch store. Shipments of merchandise to the branch totaled 108,000, which included a markup of 20%. All accounting records are to be kept at the home office. The branch submitted the following report summarizing its operations for the period ended December 31, 2016. Are already given with ending inventory, class. Second to the last information given. Inventory on hand, December 31, 60,000. How much is the markup rate in this problem, class? 20%. Okay. So, and what are we looking for? Ending inventory at cost. Again, if you already have the ending inventory as reported by the branch and you are looking for the true cost of the branch inventory, what are you supposed to do? All you have to do is to deduct the markup on the ending inventory. So we already have the 60,000. And the markup rate is 20%. So to arrive at our answer, all we have to do is to divide 60,000 by 120%, correct? No. Because not the entire 60,000 came from the home office. Okay? So remember that goods or merchandise that came from outside parties do not have any embedded markup. So the same procedure, remove the markup, but understand that not the entire 60,000 has a markup. What inventories have a markup here? Only those that came from the home office. And what does the problem tell us? That out of our 60,000 ending inventory, only 80% came from the home office. So you break down the 60. How much came from the home office? 80%. How much is 80% of 60,000? 48,000. What does that mean? How much came from outside suppliers? 12,000. Okay. Does the 12,000 inventory coming from outside parties have any markup? The answer is no. It is this 48,000 that has a markup class. Okay, so let's get the true cost of this 48,000. Okay, we know that the markup rate is 20%. So the next step is to divide 48,000 by 120%. And that will give you, okay, so that means the true cost of the 48,000 is 40,000. And then the 12,000 is already at its true cost. All you have to do after removing the markup on the goods coming from the home office is to add it with the goods coming from outside parties. So the answer here would be 52,000. Okay. So how much then was the markup on the ending inventory? Our answer would be markup on ending inventory, class. Difference between the two, 8,000. Okay, and what does that represent? It represents the ending balance of the allowance. Again, the markup on the ending inventory will represent the ending balance of the allowance. Okay, and that is already our answer, 52,000. Imagine if these are the problems that will come out in your, uh, but that will, you will just have to imagine, class, that will not be the case. Next problem. The same problem but different question. What is the branch comprehensive income under generally accepted accounting principles? If the question is phrased that way, class, what does that mean? You are looking for the true branch profit or true branch income, meaning you should be using the true cost of goods sold. You do not rely on the income reported by the branch because again the income reported by the branch is bloated by the markup embedded in the shipments made by the home office. But before answering this one, let's try to compute the profit reported by the branch, class. Again, if it's reported by the branch, then it's from the perspective of the branch. We're not talking about the true branch profit yet. So first, I want us to solve for the profit as reported by the branch. Where do we begin? Sales. And we are given with two sales figure here, sales on account and sales on cash basis. Are we going to include both amounts? Yes, because under generally accepted accounting principles, your revenues represent those that are already collected and even those that are not yet collected, so long as they are already earned. Okay, so our total sales here will be how much? 192. If you if we already have our sales, what's the next step? You deduct your cost of goods sold. And how do we solve for cost of goods sold? Beginning inventory plus shipments from home office and then plus purchases. Don't forget purchases and deduct your ending inventory. Do we have beginning inventory? No, because first sentence, class, decided to open a branch, meaning this would be the first year of operation. The beginning inventory is 0. Next, shipments from home office. How much is the shipments from home office? First paragraph in the problem. Shipments of merchandise to the branch totaled 108,000, which already includes the markup of 20%. Okay, so this would be 100. Next, add purchases. How much is the purchases, class? 52,000. And then you add 108, you add 0, 108, and 52. That will give you 160,000. What do we call the 160,000? Total goods available for sale. Okay? And if you already have your tigas, what do? You deduct your ending inventory. Are we given with that? The answer is yes. It's 60,000. Okay, so that means our cost of goods sold is 100,000. Then you deduct the cost of goods sold from the sales, correct? And that will give you how much? 82,000. 92,000. And what do we call this 92,000? This is our gross profit. And with our gross profit, what do we deduct next? Expenses. Do we include the unpaid expenses? Yes. Again, under accrual, under generally accepted accounting principles, you include those that are already incurred. Doesn't matter if they are paid or not yet. Okay? So how much is our total expenses then? 76 plus 24, that will give you 100,000. So actually, the branch will report a loss of 8,000. Okay? But this is not the answer because what is asked in problem 12-20 is the true branch profit. Okay? Since it is based on generally accepted accounting principles, we should be using the true cost. Okay? And again, as what we've discussed, how do you get the true branch profit, class? The profit reported by the branch plus what? The markup on the branch cost of goods sold. Okay? The markup on the branch cost of goods sold. So there are multiple ways of uh, getting the markup on the branch cost of goods sold class. Get the markup on the beginning plus the markup on shipments minus the markup on ending. Class Pilay markup, how much the markup on the beginning? Zero because we do not have any beginning inventory. Next, markup on shipments. How much was the build price of the shipments class? 108,000.